Welcome to the Market Edge Tech Talk with Will Pauly and special guest David Blake. We're going to review the market conditions of the past week as well as longer-term trends from a technical perspective, take a closer look at the major indices, and to wrap it up, dig into a handful of individual stocks and ETFs requested by subscribers. If you have questions or want to submit a stock for next week's webinar, email us at support@marketedge.com.
Hello and welcome to the Tuesday Tech Talk for Tuesday, August 21st. My name is Will Pauly and I'm here with my co-host, David Blake. David, how are you doing today?
Good, Will.
Excellent. Well, let's get started with the market letter. David, can you give us a quick rundown of what's been happening this past week?
Yeah, let's go ahead and click on the weekly market letter. All right, last week was kind of a strange week. We had a lot of back and forth trading, left the major averages mixed. We did happen to see get a big pickup at the end of the week where we had some confirmation that the U.S. and China would be meeting this week to talk about resuming the trade talks. We had more rotation out of the FANG stocks and some of the overpriced technology stocks in the more conservative sectors, which we've been talking about a little bit. Consumer staples, utilities, REITs, healthcare, industrials, they all outperformed. And we also had a stronger U.S. dollar again, which hit its highest level since May of 2017. That's been kind of keeping a little bit of downward pressure on crude oil prices and commodities. Copper, which is kind of a leading indicator of global economies, actually traded down to its cheapest price since June 2017. The technical condition of the market was mixed, but was fairly steady. We had tech-heavy NASDAQ snapped a 2-week win streak. A lot of weakness in semiconductors, which is a concern. The Philadelphia Semiconductor Index gapped down below its 200-day moving average on Friday. If we go to a weekly chart, you can find that it did find support at its 50-week moving average, which is a plus, and seemed to bounce off of that. The small cap Russell 2000, which we've been talking about leading the market higher, got nudged higher for a third week. It continues to bump into resistance at 1,700, or at least it did until today, which we'll go into in a little bit. Transports also worked higher, strength in railroads and airlines. It finished the period about 1% from its all-time high. S&P 500 was also about 1% from its all-time high. So we're bumping up to record territory as the week ended on that resumption of trade talks. And when I said that the tech condition of the market was remaining mixed, one of the things that we talked about in the letter was although we made a new high in the NYSE advanced decline line, it still is not quite the robust type of numbers that I'd like to see. Although, again, starting on Thursday and Friday, we did see almost 2-to-1 advanced decline. That was good. But we're also having a little bit of anemic number of new 52-week highs versus new lows. When we go over the old tech talks, we would talk about how we'd like to see that at around 250. We're just now getting into the triple digits, around 100, 150 on the NYSE and NASDAQ. So we would see a little bit more expansion in that. It is starting to work off some of the negative divergence that we saw. We kind of thought that if we didn't see this, some of this reversal in some of the indicators and the averages, that we might be ready for a little bit of a pullback. But with today's action, where we already have the Russell 2000 making a new high today, we had Dow Jones Transportation Index making a new high today. The S&P 500 has been on both sides of the line of a new record high today. We'll see where we finish up later on today. I think what we could possibly get a little bit of a short cover squeeze here, which could surprise us, is where the market goes to the upside, especially if we get rid of some of that overhang from the trade and tariff talk we've had with China. If that makes some good progress, I think we can be a little bit surprised as how far this market can go. Also, one of the keys that I wanted to talk about a little bit when we talk about this rotation out of the technology stocks, one of the keys to this market going higher is that we want to see the rotation of that money going from the technology into maybe some more value-oriented sectors like healthcare, financials, consumer staples, and industrials, which is what we're seeing so far. And that would actually, just broaden the base of the bullish sentiment of this market and help this thing work its way a little bit higher from here.
Thanks, David. Let's move on to the market recap and look at some of these internal breadth indicators.
Okay. Okay, let's go on down the page and look at the AD lines. Okay, there you can see the AD line on the NYSE there on the left over here. We had a nice couple of days here on Thursday and Friday. It's breaking out to that. Now, this is considered a leading indicator of market direction and bolsters the idea that the market can work its way higher again over the next couple of weeks. With the NASDAQ also, we're having a good day today as we break out, as we get closer to new highs. We'd like to see this thing break up above this line here over the next day or two, which would be a plus, also just showing broad participation to the broader markets move higher. Okay, here's what we saw some good movement in this yesterday. We're up here on the New York with the new highs, got up around 150. I'd like to see this up over 200. We're seeing also a full pullback here in the number of new lows. Yesterday we were around 30 or 40. Over here on the NASDAQ, you can also see a little bit of a spike yesterday where we're getting up here in the mid, in the triple digits again for a second day. We're in the triple digits again today as we're nearing new highs. That's a positive also. I'd like to see this get up above 200, which would add more strength to it. And just a little bit of sentiment indicators down here at the bottom. We're still a little bit too bullish. This here's the weekly bull advisors. We're up, anything above 55 is actually bearish. It means that they're getting too much bullish sentiment out there. So this is a little bit of a caution. And also down here with the weekly bear percent advisors, it's still too low. I mean, there aren't any bears out there. Most people think it's going higher. And here we're even seeing the VIX now down here. We got below, and I think around in the tens last week or the week before. Had a little bit of a spike up here on last week when we had those triple-digit down moves. But again, we're working our way in here. That means the traders aren't too fearful of where the market is right now. They think that we can go higher.
All right, now that we've got an idea of how the broader market is moving, let's discuss something that we've briefly talked about on the show here, but haven't really explained or gone over very much. I'd like to take a look and take a minute to really drill down and see what value we can really get out of the daily market and how it differs from the weekly.
All right, let's go ahead and click on last night's commentary. We talk about transports lead the market higher. All right, what I do on the daily market commentary is to try to pinpoint what was going on that day that maybe differs, narrows the list of events that were happening. I try to name a couple stocks maybe that had some announcements, made some big moves up or down. I also try to talk a little bit about what sectors were leading, what's lagging, if there were any events like maybe the dollar firmed up or maybe oil dropped 3 or 4%. We talk a little bit about the breadth, whether it's improving or deteriorating. And then I try to give just a 1 or 2 or 3 sentence on highlights of the market, just to give you about a little bit of heads up about what I'm looking for over the next day or two. Okay, last night we started the week yesterday on Monday, and we talked about the major averages opened the week in the plus column. Global markets were higher. We had a little bit. Every sector was green early. We came off the highs at the end, but at the end of the day, industrials outperformed, and that was basically on the airlines. The airlines were up almost all of them were up about 3.5%. American Airlines Group came out with some good numbers that they talked about. It was up 5.82%. I also noticed that Delta and United and some of the other ones were all up over 3% yesterday. So that was good. We've been talking a little bit on the daily market commentary about the railroads and the airlines and how we would like to see the transports and the Russell 2000 lead this market to new highs. And that's exactly what we got today. We talked also about what was lagging yesterday in the market. Consumer staples and technology were the laggards. Okay, breadth was positive. We talk a little bit about this every day. Volume was very light yesterday, which was a little bit of a cautionary flag. You'd like to see volume confirm a market's move. But, again, it's summer light, which is not going to have the vim and vigor, more, if you want to say that, they usually get. Now, also I talked a little bit again about, we talked about negative divergence. Well, some of that negative divergence that we've been talking about the last couple of weeks is working its way off. One of the the events was the number 52-week highs. We got triple digits both on the NYSE and NASDAQ yesterday, and that's good. Okay, we also saw crude oil prices go up yesterday. We'll talk a little bit about that. That it had to do with the dollar. It may have to do with supply issues or drawdowns, that type of thing. Crude oil's up again today for a third day, so we're getting a little bit more of a nudge back up towards resistance area around the $68. Okay, then at the bottom here, where I give a couple comments about what to expect the following day. Okay, we talk about the emerging markets and foreign markets could get a boost as the trade talks get resolved, and if we get if we get a push by the transportation and Russell 2000, we could get a push by that to lead the broader market in a record territory, which I thought yesterday it looked good that we could do that this week, and that's what we got this week. And we'll also give a little bit about what earnings are maybe coming due on the next day also. Now going back a couple of days, you can we don't archive these right now, but we used to talk about that, and we would go back. If you looked back a week or two, you could go back and see where what we expected on the market going forward. Some other companies that had earnings coming out. One of the things is from like August 3rd that I pulled up here. We're talking about the number of new highs being negative divergence. But then we talked about that we were just starting to see the rotation from high-flying tech issues into more conservative sectors, and we brought that out almost 3 weeks ago, where we were seeing that rotation. And just by going to these daily, just to get a quick overview of what happened and what we expect the next day, can give you a little bit more shorter-term direction of and insight as to how you may want to set your trades up ahead of the next trading day.
All right, thanks, David. Very informative. I think next we'll move on to our customer questions. I think we've got at least one, starting with XBI. I think this is a biotech ETF. So, David, you want to take it away?
Yeah, okay, let's go ahead and take a look on here. Let me turn off the tooltip. Tooltip is this bar here where you, let me turn this on real quick just so you can see what it is. When you're going around here, this is if you want to zero in on something, this box pops up. It'll give you the open to high, low, close, give you some statistics on what was going on that day. Turn that off if you're going to dig in here and you can find out what's going on. All right, here's the XBI. You're seeing it kind of working its way down over here. It's had a little bit of weakness in the biotech for the last couple of days. You're not far off the highs. If you want to draw in a trend line, you can see where maybe coming over here, we're having a little bit of trouble. The 21-day moving average is coming down on that. We got a nice bounce today where we're up about 1.5%. But more important than this, you can see coming across the bottom, we're kind of in a triangle pattern. That to me, if we can break above this 21-day moving average, which is a fairly short-term average, you're going to get a run back up here where we can test the 50-day moving average and move higher. One of the good things I look at is what sector is biotech in. It's on an XLV. And if we look at XLV, which is the healthcare ETF, you can see that this is one of the strongest sectors out there right now. The little bit of sideways pattern in biotech, I would use this while we're as a consolidation phase to look at and use it as an opportunity to buy more into the biotechs. As you can see, the broader sector of healthcare is outperforming. Of course, this has other things like medical devices, pharmaceuticals, which are very, very strong right now. It's broken out. Today it's making a new high, also leading the market higher, 1-year high, and that is going to pull these biotechs up. So go ahead and continue to buy on biotechs on weakness. They're having a strong day today, and I would look. I say again, you don't just pick one or two. My advice always to that is to buy yourself a little bit of a basket where you buy maybe 4 or 5 of these, so that you don't just blow up if one of them doesn't get FDA approval. This way, if you have 5 of them, maybe 1 or 2 of them gets that approval, and they go from $20 to $60, and the other ones don't do anything, and you have one that's probably going to blow up, and that'll keep your assets in good form.
All right. Thanks, David. That's all we have for you this week. Remember, if you have a question you'd like answered on the next Tuesday Tech Talk, email it into support@marketedge.com or ask one of our live chat representatives to pass your question along to the next Tuesday for the next Tuesday Tech Talk. Thank you for tuning in, and we'll see you next week.